Hey, it's Joelson here. I'm coming at you with another variable rate update. What do things look like this week? So a little bit of uptick on the fixed rate, and of course the variable rates remain the same. 0.25% was up in the beginning of March. Now this week is the Bank of Canada meeting. The prediction is that we would hit a 50 basis point increase, which would be 0.50, which would be unprecedented. Happened one other time they moved the rate back down. Although I remain in my opinion that rates, not going up in any excessive manner. I mean, that's still pretty much in line with what I thought would happen. We're having a lot of conversation right now with people that go, what about, where do you think rates going? I mean, this is a situation right now where we see, it's almost like someone saying to the government or to the economy, hey, you're going to lose your job in a year, so start banking cash. And that's what raising rates does. So move rates up for a year's time and drop them back down. Pretty good data surrounding that being a very possible type of situation. So that's really, really important to be aware of, and that is in line with historical data. I want to speak briefly, though, about, what if you said, well, look, Joel, I agree with everything you're saying and you have said, but what, rates go up, how can I protect myself from all these different things? So here's a few strategies you could be doing. About. First of all, if you don't have a guaranteed variable, and you may not know if you do, please reach out to me. So guaranteed variable means that the variable is guaranteed that if the fixed rate interest is less than the variable rate interest, that we compensate you the difference. On every mortgage that we've done qualifies to this program. You have to have done the full payment reset. If you don't know what that is, reach out to me and we can adjust that. So that's the first thing. Make sure you have a guaranteed variable. So that completely eliminates any risk around you paying more interest over time. Not possible. You have a guaranteed rate. You're guaranteed the variable interest will be cheaper than the fixed rate. That's option one. The second thing is you're worried about payments going up. You can ask to have your payment moved to a fixed payment variable. There's not necessarily much cost to do this. Probably for our clients, we can really do it for little to no cost. So fixed payment means your variable, that your mortgage payment never, ever goes up, no matter what the rate pays, no matter what rates do. So those are two strategies. And if you don't know if you have those things, reach out to us. And because we do have people in all sorts of situations on variables. So don't assume that that they're all the same, because they're not all the same. So that's the first thing. The third thing to be really aware of as rates go up is that you could really think about hedging your variable for inflation. So what I mean by that is that maybe let's have a chat about you pretending your rate's 5%, moving your payment up to reflect that, because you're not going to see that's actually not a big payment change. But also all that difference is going to principal. So that's one way. And then as rates go up, you build yourself a buffer. You can actually move your payment down if rates go too high. There's a lot of ways to do that. So inflation hedge. That's strategy number 3. Strategy number 4 is you need to be looking at repositioning all your other debt. So if I have credit card debt, if I have student loans, if I have credit lines, if I have car loans, maybe I need to put all these into a mortgage and to have lower payment over time. There's a lot of people that are fussed about rates going up, but not concerned about 10, 15% loan or 20% credit card. Craziness. Let's get those into the mortgage. One thing that some people say they worry about is, hey, if I put that into my mortgage, I will pay that off over 30 years and I'll just pay a lot of interest. True, if you take 30 years to pay it off, but you can also put it into your mortgage, keep your same payments. Let's say you have $1,000 in credit card payments and car loans. What if you just pay an extra $1,000 in mortgage, so that into the mortgage, then you will pay it off in the same amount of time at a fraction of the interest. So these are all really good strategies to be aware of. And again, Bank of Canada meeting this week. We're going to send out a quick video afterwards. We are expecting a 0.5% increase, and still recommending that is the best way to go by a long shot. If you went to 2.2 on the variable, you still would have had the cheaper rate in the time that you had it, so you still would have been better taking it to begin with. And with rates going back down in 12 to 18 months time, you'd still be cheaper taking that as well. So fixed rates are around the 4.2% rate, so that's definitely not recommended. So as always, questions or anything, please reach out to me. Please share this video with whoever you know, and subscribe to our channel if you want any more variable tips or any other mortgage videos. So we're doing lots of stuff, and we'll talk to you soon.